So I wanted to come on and do a short video about mortgage payments. I've had a few conversations lately, and I know there are mortgage calculators all over the internet. And you pop in some numbers, and let's say you do a loan for $500,000 for 6% interest, a 30-year loan comes out to about $3,000 a month. And people look at that and go, I can afford that. I should start looking for a home that's $500,000. Well, there are more things that go into that mortgage payment that some people may not realize. And I just wanted to, again, do a quick video and go over some of those other costs that will be built into your mortgage payment. So then you can have a realistic idea of what you can actually afford and what that payment is really going to look like. So let's get into it. All right, so I pulled out the old dry erase board here so I can write down some numbers and kind of show you what the mortgage payment would actually look like. So we mentioned $500,000 loan, so let's start with that. Let's just put some numbers up here. I have some notes here and give you an idea of what's going on. So I'm just going to kind of sit and move around here, but at a $500,000 mortgage, right? And let's say we're going to do 6% interest, and we're going to do 30 years, okay? All right, so that roughly comes out to about $3,000 a month for principal and interest on this loan. So let's just put that over here. Get a little dollar sign there. All right, so just for principal and interest on a $500,000 loan at 6%, 30 years, you're looking at about $3,000 a month. I think it's just under that, but roughly. I am not a mortgage specialist or a loan officer of any kind, not a lender, so I'm just gonna give you kind of some average numbers and some of my experience with what I've done with this, but always reach out to different professionals in these areas to get your exact numbers of what it's going to look like for you. So, like I said, a lot of people will do a mortgage calculator. They'll look at this number and go, $3,000 a month, I can do that. I can get a house right now. Let me start looking around. You should always check with your lender first to get your exact numbers. But let me tell you something else about this. So there are going to be 3 other things that need to be included in your monthly payment for your mortgage. So one of those is PMI, that is private mortgage insurance. Another thing is going to be your homeowner's insurance. And the third thing is going to be your property taxes. Now there are going to be some other things that you can do if you'd like to, kind of elective things. But those 3 things are going to be included in your payment. And the mortgage company is going to pay those for you, but charge you for it. So it's kind of interesting because PMI, mortgage insurance, it actually covers the lender, but you're paying for it to cover the lender, but that's the only way they're going to lend you the money. So let's talk about those 3 things and the cost associated with those 3 things. Again, roughly on a $500,000 loan, right? All right, so let's talk about PMI first. So let's go over here. Let's put in PMI. Again, private mortgage insurance. Now, on this size of a loan, that's going to run anywhere from $2,500 to $7,500 a year. We're going to just go right in the middle, and we're going to say that it's going to be $5,000 a year in this instance. And $5,000 a year on my notes here works out to about $416 a month. So we're going to add that over here to your monthly payment. $416. Okay. So again, mortgage insurance, $5,000 a year, roughly. Now let's talk about the next thing you're going to have to pay for, which is homeowner's insurance. So let's go over here and go INS for insurance, if my pen will work. So homeowner's insurance here, I don't like the way how narrow this is writing, but homeowner's insurance, again, roughly on this home will be about $2,000 a year. Homeowner's insurance is going to cover a lot of the things about your house, a lot of the belongings in your house, personal property in your house, but it also carries a little bit of liability insurance in case something happens to somebody while they're on your property. So again, it kind of protects you from having somebody sue you in some instances, or maybe from things being stolen from you, different things like that. Again, you have to check on your specific policy to see is what's covered in yours, but roughly that's what it's for. So again, homeowners insurance, there's another thing you're going to add in. That's going to be, let's say, roughly $2,000 a year. So at $2,000 a year, you're looking at about $167 a month. So we'll add that over here to our monthly payment. Okay, so now I told you there's three things, right? So the third thing is going to be your property taxes. Now, property taxes are going to vary. As a real estate professional, as an agent, I cannot tell you where to live around town. But one thing you can look at, there's two things to do when you're looking for a place to live for sure. But one thing you can do is look at property taxes. Generally, places that are more popular, more desirable, whatever it may be, they have higher property taxes. I'm sure you've heard this before. Location, location, location. That's what you're paying for. If you have a 2,000 square foot house on the east side of town or a 2,000 square foot house on the west side of town, it costs roughly the same amount of money to build that home. The biggest difference in the price of that home is the location, right? The land that you're getting with that. And again, more popular, more desirable, the property taxes go up on those areas. So I looked at a bunch of $500,000 homes that are being sold in Las Vegas right now today, and property taxes varied widely on those properties. It was between about $1,200 a year to $5,600 a year. So again, we'll just go right into the middle and we'll say $3,400 a year. So we'll go over here and go taxes, and we'll go $3,400 a year, and that's going to break down to about $283 a month. So $283. So these are the things that are going to be calculated in your monthly mortgage payment to your lender. Again, they're going to pay these things for you, but you are the one actually paying the money for them. They're just going to make sure they get paid, again, to protect themselves, make sure nobody can put a lien against the property that they technically own because they have the outstanding loan on it. I was talking about property taxes and how to decide where you want to live around town, and I told you that's one way you can find parts of town that maybe are more desirable or popular is by the amount of property taxes. The other thing I always tell clients to do is if there's an area of town that you're looking at that you kind of like and you're interested in, go to the restaurants, go to the stores, go to the cafe, go to the businesses around that area. Ask the people that work in there if they live in the area, and if they do, ask them what their thoughts are on it. So that's going to be another way you're going to be able to look at things and decide if it's going to be where you want to be. Now, there are a lot of other factors, right? You might care more about the schools. You might care more about the shopping. You might care about how close it is to the lake or how close it is to Mount Charleston, or there's so many different things that may interest you as an individual. So you got to consider all those things as well. But I always like to look at talking to people in the area and what the amount of property taxes are, and that kind of gives you an idea of how desirable that part of town may be. But enough about that. We're talking about mortgage payment. So now you've got these three things plus your principal and interest. Let's see what that will add up to now. So let's just add this all up. We've got 16, carry the 1. You've got 16, carry the 1. You've got 8, and you bring down your 3. So now you are looking at, instead of $3,000 a month for a $500,000 loan, you're looking closer to $4,000 now, once you include these other things that are going to be in your mortgage payment. So these are good to know, like I said, when you're trying to decide if you can afford a house or how much of a house you can afford, you need to factor these things in. And if you know the exact house you're looking at, you can get the exact number for the property taxes. and you can divide that by 12 and figure out what that's going to be monthly. You can call around and find out exactly what the PMI and the homeowner's insurance is going to be. So you can do that as well. Once you have the exact property that you want, you can find these other things out to see if it will work for you or not. Now, generally, not in all cases, but generally, lenders like you to make about 3 times what the monthly payment is. Now, again, I'm not a mortgage professional. I'm not a lender. So I'm not sure if they, off the top of my head, I can't remember if they use this top number or they use the bottom number with everything included as far as 1/3. But let's just say they use the top. In this instance, you would need to make $9,000 a month, which is $108,000 a year. And the percentage of people that make over $100,000 a year is pretty low, but it does matter for your entire household too. Let's say you're a couple, a married couple, and you're both going to be on the loan, then both of your salaries can be put into that as well. Now, not every lender is the same. They have a lot of different programs, and I'm not saying if you don't make 3 times this number, you can't afford the house, because they have a lot of different programs. If you need to get in touch with a lender, I know plenty of people that I work with. I can get you a number, a name and a number to somebody that you can talk to. And I always suggest that you do, because they do this all the time. You can sit down with them and just tell them, you don't have to give them a credit report or anything. Just tell them what you think your credit score is, all of the bills that you have, what your salary is. They can look at all that stuff and they can give you a rough idea of how much you can afford as far as a total loan and a monthly payment. And now later they can do a soft pull on your credit, and when you're ready to go, a hard pull on your credit and get all the exact numbers. But they've been doing it long enough and they do it so often that they can tell you pretty much where you're going to be before having to pull all your information, just going on what you tell them. Now, obviously, you have to be honest with them because you want to get the right numbers, but they can do all of that stuff for you. And the cool thing is, they work with people so often that they can tell you, hey, pay these 2 credit cards down. It's going to make your credit score go up to this, and now you can afford this, and now you can get approved for this. So not only can they tell you if you're ready to go today to buy a home, but they can also give you a path to home ownership, because they can look at all these numbers and decide what's going to work for you. And then ultimately you have to decide, do I want to pay that much money monthly to own a house? Because now there are more things than this, right? So these are the things that are going to be included in your mortgage. So something else to add about mortgage insurance is that lenders will require that if you put less than 20% down on the loan. So it's good to watch that, because at some point you may be able to have the mortgage insurance removed from your monthly payment. So initially, if you put down less than 20%, maybe you're on a program for 1, 3, 5, 10%, whatever it may be, they are going to require that monthly payment to be added in for mortgage insurance. But keep an eye on your loan, because once you do get down to where you only owe 80% of the initial principal on that loan, or the initial value of the home, they may let you drop that $416 a month to make that payment a little bit more manageable. So that's something that's important to know about mortgage insurance, that if you do put 20% down or more, you may not be required to have that at all, and that will affect your monthly payment as well. So keep that in mind too about the PMI. Now, there are a few other things I, as a homeowner, also pay for in addition to this, right? So one of the things that I have is a home warranty. So that covers a lot of your appliances throughout your house, right? Washer, dryer, refrigerator, stove. I mean, you can take as little things covered or as many things covered as you want. Obviously, it's going to change the price. That is roughly going to run you $600 to $800 a month, probably closer to $800 now. Not a month, a year. $800 a month. That works out to about $67 a month if it was an $800 home warranty. So that's another thing you would have to include in here that you don't have to have, but it's definitely a suggestion. There's also some kinds of insurance on your water lines and your sewer lines. So even though in your house, those are protected, right? I think that is under your homeowner's insurance. So even though in your house it's protected, from your house out to the street, those lines aren't necessarily covered. If something happens out there, you may want to have some coverage for that as well, because that can be a costly repair. The utilities companies, they take care of all of the lines that are running down the street, right, to all the homes. But from that line to your house isn't necessarily always covered. So it's good to have other insurance. So there is a sewer line insurance. Right now, mine runs about $108 a year, which is $9 a month. And I have water coverage too for all of the water connections from the street to my home. That one right now is $48 for the year, about $4 a month. I can't remember if that was a first year special on that, and then it's going to go up later. But those are a few other things that I pay for being a homeowner aside from the monthly mortgage payment. Again, these aren't requirements. You don't have to have them, but it is going to help you in the event that something does go wrong. So again, I just wanted to talk a little bit about mortgages, what's included in it, so you can kind of see it here. If you have any questions about real estate at all, please give me a call. I could just talk you through all the different things that I know about that can help you make decisions. And then you can decide if it's a good time for you to buy or sell or rent or whatever the case may be. Like I said, if you do want to get involved in seeing what you qualify for, I have plenty of people that you can reach out to, give you their name and number, and they can set you up and let you see exactly what's going to happen for your specific situation. I say that all the time because everybody is a little bit different. So again, just wanted to give you some background on some of the other things that some people don't think about that go into their mortgage payment. If you have any questions, give me a call. I hope you have a great day. It's another beautiful day here in Las Vegas. We're right at the beginning of February now, and it's still like 70 something degrees outside and clear skies. I'm looking out the window right now. Beautiful outside. So I'm going to get out and go for a bike ride, I think. But hopefully that helps you out a little bit. And I hope you have as an amazing day as I'm going to have. So I'll talk to you soon. Bye.